All right, welcome back for another episode of Carnivore Trades. Today is Tuesday, November 29th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, into it here. The market's fractionally lower here on on the spiders rather. Triple Qs are leading to the downside, however, down 85 basis points here. Dow, on the other hand, again, a lot closer to the flat line, and the Russell is managing to scratch out a little bit of a gain here. Some red flags kind of coming up here. So again, volume very, very light again today. Take a look at the spiders here on the daily. It's about 3:40 p.m. and we have 45 million shares here traded. I guess everyone's watching the World Cup. I'm not really sure why the volume is this light. I mean, I know there's generally a holiday hangover that typically happens, usually the Monday after a holiday. Usually by Tuesday, you get some volume back in the market. That has not been the case, at least not yet here. And we do have Jerome Powell speaking tomorrow. Maybe the market is just kind of waiting on that. It's certainly a possibility here. And I do think that at least moves the market here. But what the red flag I'm talking about here is, so we have the China reopening, FXI getting a nice bid off of that. And by reopening, we're just talking about their easing policy. That could easily change in 2 weeks. They change their minds all the time there. But FXI, nice bid. Take a look at Billy, up almost over 20% now. Baidu also having a nice day, up 5.5%. Alibaba, nicely in the green as well. So China stocks seeing a nice bid here. And then you look at Apple, and this is down 2.5% or close to 2.5% on the day, and that's a failed bull pattern there. So we had a nice up move, after the sell-off. Nice up move, kind of like tightening pattern here, inside pattern, presumably to consolidating to break through these moving averages and through these pivots. And that is failing now. So whenever the largest company in the stock market is, rolling over, that's generally not going to be a good sign for me. And it's looking like he wants to get down here and fill these gaps. So, it doesn't mean it happens right away. It's going to take a good reversal here, though, from, some dovish words out of Powell. If you ask me to get this thing to reverse, it certainly could happen, but this is not really a good look here for Apple. Microsoft as well, definitely on the softer side, down 0.75% again as well. So nothing terrible. Like it's the inside pattern's not broken, but the last couple of days, and I've been saying this about the spiders too recently. Why can't we break out? We're starting to get higher lows in here, so it's possible we do coil up. But I mean, with the volume this light and how light it's been, I would have thought that the market would have been able to push higher by now, and it hasn't been able to do that. So, it looks problematic right now. I'm not liking what I'm seeing. Again, like I said, out of Apple. Take a look at the semiconductors here. SMH, it's not down horribly today. And again, this isn't a terrible pattern here on the daily, but just no relative strength. And again, kind of showing leadership to the downside as well. So, market's starting to get a little bit of an uptick here as we get closer to the closing bell. It's something I do want to pull your attention to for tomorrow is to take a look at the Qs. We do have a pretty good looking hourly inside bar there. Same thing on the spider. So again, maybe a little bit more downside is in the cards tomorrow. And for the Qs, we got 15 minutes. They really need to reclaim this trend line, if you ask me, because that's going to do some serious technical damage if we close below that on a daily close. So we're hovering right on it right now. It's 280.72. That is the level there. On the triple Qs for now, we're holding that 20 period moving average, but a break of this area, it's not a healthy look. Like typically in a bull market, in a bull environment, these dips get bought right up. Like yesterday, we didn't have any sort of attempt at an hourly higher low. Like you see the spiders just grinding lower all day long. Usually there's at least a dead cat bounce on an hourly basis or something of that nature. It doesn't mean it can't continue lower afterward, but there was no bounces. It just no fight showing whatsoever. So, and I was telling my members this earlier, it's almost kind of like that. If we look on the intraday, let me flip over here. We'll get to the triple Qs. And it's just, it's that 20 moving average on the 10-minute here, rejection over and over and over. And on the spiders, it's, the 10-minute 20 moving average and the 50 moving average over and over here. It feels very much like September, and kind of like April, May. We saw that kind of algo where it was just selling that moving average over and over and over. And it's almost like that algo's been turned back on here. The only thing that's missing is volume. And that's really just the only kind of missing component. The volatility index here, the VIX, is red. In a down-ish market, the VIX has been kind of in this tight range here. It's kind of compressing down. So that's also your other, I suppose, red flag there for the bears. But I mean, this is at some point here, I think, coiled up for a breakout. You guys know my stance on that. And again, I'm not saying that we can't eventually. I'm not saying that we can't coil up and push back up to this trend line. I mean, that's certainly still a possibility. I think personally, if this was going to happen, I would have liked to have seen it happen by late last week or early this week. It's like, what are we waiting for? You know what I'm trying to say? The bulls have had every chance to get this done, and there's no volume. It's not like there's mass sellers coming in and pushing the market down. It's not like we have 100 million shares a day. We're probably going to finish with 60 million shares by the end of the day, if that. So it's not like we have a ton of overhead resistance or anything of that nature. So my question is, why can't the bulls get this done? Maybe they need Powell to slip up and say something stupid tomorrow. I don't know what's happening, but that is the case right now. The markets are in kind of anemic mode, and we need to respect that for the time being. This is a tough market to trade. We now have 0 DTEs every day. So thanks to the SIBO for that. And you can take a look here. I mean, just look at the range we've been in for really the last couple of weeks. So this is the type of environment we're in. It's very tough to trade as a day trader because we don't have that kind of trend established. Yes, we're in an uptrend, and technically this is still an inside bar. There's technically nothing wrong with it. But again, my kind of gripe here is why can't we just break out? It does signal a little bit of a red flag to me here, as far as what the bulls are doing right now. Anyways, so we talked about the Qs. We'll watch that. We'll check back in on that before the end. So market's slipping a little bit here. We'll watch that level here on the Qs. We'll come back to that by the end of the video. Spiders, again, if we do sell off tomorrow for some reason on Powell and we lose 390, there's a massive air pocket going all the way down to 373, 374 on the spiders. So that, I think, is a level that has to hold the 120 moving average as well, right in that area. And then, of course, that the 3,900 psychological level. It's also basically where this pivot low is here from the 17th. And that coincides with this level here on the Qs, which we are now below. But yeah, we'll get into that later. We talked about the semis just a little bit. Again, same kind of look here. So I'm just going to draw that in. So we'll do 212.76. And that is, there we go. So that's that level there on the SMH. Again, you have those moving averages just below it, but I don't want to see technical damage done to that. So that's a level I'm watching there for the semis. IGV is starting to put in potentially lower highs here as well. So again, you don't want to see 256.49 go. That's a huge air pocket all the way down to 242. So a big sell-off there is potentially in the cards if we were to lose those levels. Dow Transports bucking the trend a little bit. This is up 1.5%. So you can make a case that transports are up on kind of the China reopening news. So it makes me wonder what's wrong with Apple then. It's got to, I mean, I know there's Elon Musk. I don't think that has anything to do with it. Maybe it does, but transport's definitely telling a little bit of a different tale here than Apple as far as the China story goes. But again, still high, lower high. And then looking at the Dow, high, higher high, spiders, high, higher high. So still a divergence there from the transports and the semis on the daily time frame, as far as the pivot highs are concerned. So another thing to just keep your eyes on there. All right, interest rates. Again, not a whole lot going on today. The 10-year was all over the map. We gapped up, sold off, then bounced back, and basically closed at the highs of the day. So 10-year is still kind of just chopping around here. It does look like it may want to be putting in a little bit of kind of bearish chop. So for maybe a move back down to, 34.5, 35. That's certainly possible. Can't rule that out. Same thing with the 30-year. Can't rule out a move back to that 100 MA, somewhere in that area. But for right now, interest rates look to be holding up pretty well, which is not really a good sign, because if they start to run again, I mean, that's going to cause lots of problems for the market. The 2-year still has this inverse head and shoulders intact that is triggered. But if we lose that neckline, that has failed, and then I would be pretty concerned here with the market. But for right now, it's holding up, so we'll give it the benefit of the doubt for now. We'll definitely be keeping an eye on what this does tomorrow. XHB holding up really well. I did close out my nail longs, just full disclosure for everybody. I still like the pattern here, just so you guys know. I'm going to use ITB because that one follows nail a little bit better. I still like the pattern. Big up move and then declining volume inside bar. There's nothing wrong with it. I just don't trust the market right now, and that's really the end of it. That's all it is. But this is still a good pattern here. I do like this, but for me, it's just a little bit about de-risking at this time, and just in case we do. I just feel like the market it's in that kind of calm before the storm type mode. Like one of the things I kept saying before is like, nothing matters until it does. And I feel like everything's going to matter pretty soon, really sooner than you think possibly. So we'll see what we get, but nothing wrong with home builders right now. VNQ, nice reversal. They needed to reverse that today and hold that 20 moving average. I talked about I don't like that daily candle yesterday. So this pattern is still doing okay for now. I don't have an issue with it. But yeah, nice little recovery. Nice little recovery there for VNQ. Basically erased almost all of the losses there from yesterday. XLF holding up well. This is also keeping the market a little bit buoyant. Mainly JP Morgan up 1.6% on the day, and this still looks like it wants to go up to that 140 handle. Maybe a little bit above that 142 or somewhere in that range where there would be a lot of resistance. But JPM holding up well. It's been been really kind of the all-star of the day today for the market here, and really kind of help keep the markets held up well. XBD, same kind of thing. So this is holding up okay. It does have potentially lower highs in here, but you do have an inside bar, and it's kind of holding trend right now. So we'll just kind of leave it at that. Crude, what can you say? It keeps doing these weird kind of, it gets into support, it gets a bounce, it looks like it wants to hold, and then it bounces, and then it comes off the highs. Remember last week we had that beautiful tail candle, and then we got a nice follow through day, but then it came off the highs. It looks like almost the same thing here. So again, I'm not convinced with what crude is going to do right here. There's just too much geopolitical stuff going on. I do like the level. I do like the chart level. I just wish we wouldn't have fake tagged it last week, because I probably would have bought it, yesterday. But overall, crude's holding up right now. So we'll give it the benefit of the doubt. XLE is getting a little bit of a bounce. It still remains strong. Remember, there's lots of money piling into Exxon right now, because that's just where fund managers are putting their money, because they don't know what else to do. But Exxon holding up really well here. We'll see how it plays out. This is very divergent, though. And this has a lot of real estate on the downside if this does correct, which I do expect it to do in the near future. XOP also green as well, as is the OIH. You guys know how I feel about that. I'm still looking for 260 at some point in the near future on OIH. Nat gas holding up reasonably well. If this flags a little bit more, this can still push up again, but I'm not going to touch it right now. It's just too volatile at the moment, and I don't really like what it's doing. Dollar index, again, possible little, it's early, but we came down here, bounce, and now we have a possible little micro W pattern, so we'll see how this works out. But I do like that candle yesterday. That did get defended pretty nicely. So we'll give the dollar the benefit of the doubt for now. I still wouldn't rule out one more test of 104, but again, that would also imply that the spiders are going to get a bid here, and I'm not sure that that's going to happen right now. But dollar, nice little double bottom bounce and a little bit of follow through here today, so it's holding up for the time being. Gold, excuse me, still not 100% here, but gold. Nice bounce today. It did fade off the highs. You see the GLD kind of just fading here a little bit in the afternoon, but it's holding up okay with this is something I tweeted about too. Gold's green right now with TLT red, and also with the dollar green. So gold actually, it's only one day. Let's not get too crazy, but if this continues, that's also a character change. Remember I said yesterday XLE was red with rates green. That's a character change. Same thing with XLF. XLF was red yesterday with rates green. That's a character change. Gold green with TLT red and dollar green. That's a character change. So to me, it looks like a lot of parts are moving, shifting under the hood. And these are things you got to pay attention to. This will give you clues as to what's going to happen next. So definitely keep your eye on these things. Gold holding up okay. Take a look at GDX. Nice bounce today, up 3%. And that's been holding up really well all day. Big up move. Even on that dump here, take a look at the dump here in GDX versus the dump in the spiders. GDX didn't even get close to the flat line. And take a look at GLD. This is actually at the lows of the day, and GDX is at the highs of the day. So miners still holding up well, showing good relative strength. That's a bullish sign there. Silver also getting a nice bounce. Same thing, green with rates down. SILJ up almost 3% today. So I like the way the metals are behaving here. They're holding up very well. Platinum up 1.25. So nice move there off that 20 moving average. Still not a great bounce, but this is holding up really well. I do like platinum still. You guys know that. And then copper here also green today, although this is starting to kind of, so we have a down move and we're starting to kind of go sideways. So copper would be kind of the outlier here as far as the metals are concerned. So I don't like this pattern as much. But it is green for today, so we'll just leave it at that for now. Getting over to Bitcoin. There we go. Yeah, again, nothing really too new to add. It's trying to get above the 20 moving average. It's trying. But you know, what can you say? It's just hanging in there right now. Ether is and has been relatively much more stronger than Bitcoin. So it is above the 20 moving average right now, but again, not a great pattern of strength anyway to slice it or dice it. Nothing really too new to add there for right now. All right, let's get back over to, let's look at the Qs. So let's see if they say, I bet you they'll save it here. I'm not going to, well, we got about 3 minutes left. I'm not going to take all the way to the end. They're pushing the VIX down there. So they'll probably pop it up and save that level. I'd be surprised if they broke it on light volume here. I was going to be surprised here if they broke that on light volume. So 280.72, we'll see what we get the next couple of minutes. If they do close it below that level, that's a pretty good red flag here moving forward. But it does look like they're hitting the VIX a little bit, so we'll see what we get. Tesla's been, yeah, Apple's finally getting a bid here. This has been getting pounded all day. So it does look like they try to save it here before the close, but that's a level I am definitely watching here going into tomorrow for Jerome Powell. Anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. I'll talk to you all tomorrow.